Imagine this, the world's largest economy standing at the edge of a cliff. The numbers look strong on the surface, but underneath, cracks are spreading fast. Wages, prices, jobs, global trade, all colliding into a storm that could either push the United States into its next golden age or into a financial nightmare. So here's the question. Why does the U.S. economy still look surprisingly strong, even after Trump's aggressive tariffs shook the global system? And are we about to see the breaking point? Stay with me, because the story you're about to hear is much bigger than numbers. It's about power, politics, and the silent tug of war over the future of the American economy. Let's start at the heart of the issue, tariffs. In August, President Trump's administration cranked up tariffs on almost every major trading partner. Overnight, trade rules that had been stable for decades were turned upside down. The European Union, Japan, and South Korea got slapped with a 15% tariff. Canada, Brazil, Switzerland, and India, they faced much harsher penalties, in some cases up to 50%. And then there's China, America's biggest rival. For Beijing, tariffs were designed to be even harsher, unless both sides struck a deal. This wasn't just about economics, it was a chess move on the global stage. Now, tariffs might sound boring, like some technical tax buried in trade agreements. But here's why they matter. Tariffs are like a hidden tax on everything you buy. When the government slaps a tariff on imported goods, companies don't just absorb that cost. They pass it along to you, the consumer. Think about it. The washing machine in your house, the couch in your living room, even your kids' school supplies, all suddenly cost more. And when those everyday items get more expensive, people start cutting back on other spending. That's how tariffs ripple through the economy. So how bad has it gotten? At the start of this year, America's average effective tariff rate was just 3%. That's manageable. But under Trump's new wave of policies, it could rise above 10%. To put that in perspective, that's more than triple what most families and businesses were used to. Now, here's where it gets interesting. Many economists predicted that by the summer, these tariffs would crush consumer spending and send shockwaves through the job market. But that collapse never came. Why? Because Americans kept spending. The consumer, the backbone of the U.S. economy, stayed surprisingly strong. But don't celebrate just yet. The cracks are starting to show. The Consumer Price Index, basically the official tracker of inflation, jumped 2.7% compared to last year. That might not sound alarming, but look closer. If you strip out food and energy, the core inflation number rose 2.9%. That's well above the Federal Reserve's safe target of 2%. And where do you see the pain first? Big-ticket items. Furniture, appliances, cars, tools, even children's products, all creeping higher in price. If you bought a couch, a refrigerator, or school gear this year, you probably felt the sting. Economists say this is exactly what they feared. Tariffs quietly pushing prices up across the board. And once inflation gets rolling, it's hard to stop. The Federal Reserve has already promised to use every tool at its disposal to prevent tariffs from creating runaway inflation. But here's the tricky part. If they raise interest rates too aggressively, they risk slowing the economy down even faster. If they do too little, prices could spiral out of control. It's a lose-lose situation. For ordinary Americans, it doesn't matter what economists debate in Washington. What matters is simple. Can I afford the same groceries I bought last month? Can I fill my gas tank without emptying my wallet? Can I save for the future without feeling crushed by the cost of living? And lately, the answer to those questions has been getting harder and harder. But here's the twist. Despite all these warning signs, the American economy still hasn't buckled. Why? 3 big reasons. Consumer strength. For now, household savings and spending habits have kept demand alive. People are still shopping, still eating out, still traveling. Corporate adaptation. Many companies are finding loopholes, shifting supply chains, and negotiating new deals to soften the blow of tariffs. Global leverage. The US dollar remains the strongest currency in the world, giving America more breathing room than other nations facing similar problems. But don't mistake resilience for invincibility. Every system has a breaking point, and the US economy may be closer to its edge than it looks. Signs of slowdown are already flashing. Weaker hiring numbers, slower growth, and mounting pressure on industries like manufacturing and construction. For millions of workers, job security no longer feels guaranteed. And remember, history shows us that economic downturns don't arrive slowly. They hit all at once, often when people least expect it. Gross domestic product, or GDP, is the single most important measure of how an economy is doing. Think of it as the country's financial report card. And in the second quarter of 2025, the U.S. economy pulled off something surprising. Instead of shrinking, GDP grew at a robust 3% annual rate. That's a big rebound compared to the first quarter, which actually saw a 0.5% contraction. On paper, this looks like good news, proof that American consumers are still out there spending, traveling, and keeping businesses alive. But as with everything in economics, the headline number doesn't tell the full story. When you zoom out, the picture isn't as rosy. Put the first and second quarters together, and the economy grew just 1.2% in the first half of 2025. Compare that to last year, when the pace was more than double at 2.5%. Economists call this a slowdown, not a crash, not a collapse, but definitely a loss of momentum. And that's the danger, because slowdowns can sometimes be the calm before the storm. Imagine you're running a small business. One month, customers are lining up. The next month, the foot traffic slows down, orders shrink, and suddenly your margins are razor thin. You're not bankrupt, but you feel the pressure. That's exactly how the broader economy feels right now. The job market, long considered the crown jewel of the U.S. recovery, has finally started to wobble. For years, the American labor market was unstoppable, pumping out hundreds of thousands of new jobs each month. But in July 2025, the momentum cracked. Job growth slowed to just 73,000, way below what analysts expected. And the bad news didn't stop there. The Labor Department went back and revised May and June's numbers downward by a shocking 258,000 jobs combined. That revision wasn't just a rounding error, it was a warning shot. It meant the slowdown wasn't just starting in July, it had already been happening for months, quietly, beneath the surface. Here's why that's so important. Jobs aren't just about paychecks, they're about confidence. When people feel secure in their jobs, they spend more. They buy houses, cars, vacations, and groceries without hesitation. But when job growth slows, confidence fades. Families cut back, businesses pull back, and that hesitation, multiplied across 330 million Americans, can tilt the entire economy toward stagnation. Now, this brings us to the institution at the center of America's Economic Balancing Act, the Federal Reserve. The Fed has a dual mandate: keep prices stable and keep people employed. Simple in theory, brutally difficult in practice, because right now, the Fed is stuck between two fires. If it keeps interest rates high to fight inflation, borrowing stays expensive, businesses hire less, and job growth suffers. But if it cuts rates too quickly, inflation could flare up again, undoing all the progress made over the past 2 years. Economists call this a two-sided risk. In plain English, whatever choice the Fed makes, someone gets burned. And if the economy wasn't complicated enough, politics adds another layer. President Trump has openly criticized the Federal Reserve for not lowering rates fast enough. He argues that if the Fed eased borrowing costs sooner, the U.S. economy would be booming even more. Tariffs or no tariffs. His administration defends its trade policies, calling them the price of strength. In Trump's words, "We have a great thing going. I think we're going to have the richest economy you've ever seen." But beneath the slogans, the cracks are visible. Business owners are stuck in limbo. Should they raise prices to cover tariff costs, or hold back and risk losing profits? Should they hire more workers, or freeze hiring until demand picks up? By fall, economists believe we'll have much more clarity. That's when businesses, consumers, and global markets will finally feel the full weight of tariffs, inflation, and interest rates combined. And once again, it all comes down to the consumer, the average American. If households can keep spending, the economy might land softly, avoiding disaster. But if consumers start to pull back, if they save instead of spend, if they delay big purchases, if they stop traveling and shopping, then growth could stall completely. That's why one economist put it bluntly: We expect growth this year to be between 0.5% and 1%. That's slower than before, but still a soft landing, if we can hold the line. But not everyone is so optimistic. Some forecasters warn the second half of 2025 could bring no growth at all. Picture that, the economy moving sideways. Not officially a recession, but not growing either. Stuck in neutral. And for millions of Americans, that's the worst of both worlds. Prices stay high, but wages stagnate. Job openings shrink, but bills keep coming. Families feel squeezed, and the so-called soft landing doesn't feel soft at all. So where does that leave us? On one side, you have hope. GDP growth in the second quarter, steady consumer spending, and the possibility that America avoids a hard crash. On the other side, you have fear, slowing jobs, weaker growth, unpredictable tariffs, and a Federal Reserve caught in the crossfire. And the scariest part? Both sides might be right, because the U.S. economy in 2025 is no longer just about numbers. It's about power. It's about whether Washington's political battles, global trade wars, and monetary policy choices will collide into something bigger. In the next phase of this story, we'll dig even deeper into what lies ahead, the hidden dangers in America's debt, the global reaction to Trump's economic gamble, and whether the so-called soft landing is even possible. Because one thing is certain, the real test hasn't even begun yet, and that's just the beginning. If you found this breakdown helpful, make sure to like this video, subscribe to the channel, and share it with someone who follows global news. Because the next phase of America's economic story is going to be even bigger.